Hello everyone, Stephen Furness here, Director of MGD Wealth and Chair of the LDI Connect Asset Management Investment Committee. Today is 23rd of April 2025 when we're recording this, and I'm pleased to be joined by Steve Gross, who is the Chief Executive Officer, CEO of Palisade Impact. The LDI portfolios have exposure to the Palisade Impact Fund, introduced by our asset consultant WTW a few years ago, and I thought it'd be a good chance to get an overview on the fund from Steve and go through the investment thesis and maybe a quick update on how it's all tracking. Welcome, Steve.
Thanks, Stephen. Really appreciate you getting me on and appreciate the support from LDI as well.
Yes, very good. Now, we did, trying to remember, I think it was 2022, we had a similar video with you for our LDI Connect investors. So things have moved on. The portfolio is maturing, which is great. Returns seem to be heading in the right direction, sort of around about the 21% mark since inception, which for the early years of a private equity infrastructure strategy is pretty good. So I thought, Steve, you spend a minute just on reminding investors what impact investing is and what you're trying to prosecute through the Palisade Impact Fund. And then we might have a chat about a couple of the positions that you're holding.
Yeah, sure. So in terms of what is impact investing, I think there's a broad definition. But in our view, it's investing to intentionally and measurably have an impact. And in our view, that impact should be able to enhance returns. So we're not seeking to concessionary returns where we're giving up return for impact. You want to make sure that the impact we're having helps businesses make more money. The way we do that is that we look to invest in next generation infrastructure. So that's infrastructure that has the classic infrastructure characteristics, but is higher growth because it invests at the nexus of changing technology, regulation, and business model. And in doing that, we're looking to address the race to zero, being zero emissions, waste, and equality. And off the back of that, we've built a really solid portfolio of 5 assets that allow us to have incumbency in sectors that we really like, and help us to grow and hopefully grow the businesses to be sort of impact unicorns over the next while.
Very good. Now, this is by no means a small-scale strategy. You're managing capital on behalf of some of Australia's biggest superannuation funds. WTW, our asset consultant, obviously supportive of the strategy, and that's why it's part of the LDI Connect portfolios. Give us a flavour for the size of the pool and maybe not by name, but some of the investors partnering with this strategy.
So we're strategy's now about 650 million in terms of fund. In broad terms, we have about 20% of the capital comes from high net worth investors, foundations, family offices, not-for-profits, and then the remainder comes from largely superannuation funds. Probably the investors that I can talk about, one is Rest, are a large investor in our funds through their 1% impact allocation. The Ramsay Foundation is an investor, and ANZ Staff Super is also an investor. Previously, Qantas Super was an investor, and now through the acquisition of Qantas via Australian Retirement Trust, we have ARTs. So
Very good. Now, your team, you are ultimately a part of the much larger Palisade infrastructure business, which is a leading infrastructure manager in Australia. Your subset of that is obviously looking for businesses that obviously prosecute that impact investing strategy. So we're sort of three and a bit years into this strategy. You've found 5 or invested in 5 really good businesses. It looks like maybe a couple of examples just quickly to give investors a flavour for the types of opportunities you're looking for.
probably two investments. One is repurpose it. So repurpose it is a organic, hard and soft organics recycling business. So it recycles on one hand your green bin, your household food and waste. The other, it recycles construction, excavation waste, so soils, sand, rock, that kind of thing. It operates within Melbourne. The reason we like it is that it is well located. So it's well located in the 2 population centres of the north and southeast of Melbourne, where there's the most growth. But it also uses an Australia First technology that is able to process and recycle that waste cheaper and faster than others. And so that cost advantage allows us to build and grow a really, really good business. The goal of the business now is really to continue to grow on the sites that we're on in the existing businesses. So we're very happy with those. And then the next sort of phase of the business is about using more of the sites that we're on and then acquiring other businesses bolted on to them.
Because I know there's a lot of social pressure, I guess, is the word on all the waste the big supermarkets generate and things like that, food waste. That links into this business model, I imagine.
It does. So one of the areas that we're looking at doing is more of that commercial and industrial waste. So how do we take waste, Coles, Woolies, and IGA, depackage it, and then put that waste organics processes? So that's something where we're looking at actively at the moment. Australia on a per capita basis, has about 50% more household waste per capita than, say, somewhere like India. We are a big waster of food. So it is something that we have to tackle. And the relevant part of that, of course, is that the more you waste, the more expensive life is, because it's not used before. Or
That's right.
selling stuff to us, we have a lot of waste of what they're producing. So the more we can tackle that problem, the better it would be for the cost of living.
Very good. Yes, it's important issue. The another example of one of your portfolio companies.
Probably a more recent one that we've acquired is a business called Energy Locals. So Energy Locals owns what's called community energy networks within apartment buildings. So it basically brings in wholesale energy and through our network, it then takes that energy into your apartments and meters those. We seek to do that and grow that across a range of apartment buildings. So we have about 50,000 customers at the moment. We're looking to increase that to more than 200,000 over the next 5 years. And while we do that, look to ensure that the energy that we use and the apartment buildings become greener through our partnership. So that means more rooftop solar. It means accessing more renewable energy, putting EV chargers in the basements, putting more batteries. And so our two co-investors in that, one is, again, Australian Retirement Trust through that, through an investment by Motus. And the second is the Clean Energy Finance Corporation. We've invested in that with the goal of helping us decarbonise the portfolio as well.
And I imagine with the medium and high density housing isn't going away; it's only increasing as a percentage of the housing stock. So I imagine that thematic supports that business longer term.
It does. There's really two kind of key sources of growth in the business. Yeah, in addition to bolting on existing smaller businesses. Yeah, the growth really comes from two things. So one is, there's more greenfield being developed. But the second is that the brownfield opportunity, which is existing apartment buildings that have community energy networks, where those existing contracts are sort of rolling off, you have an ability to buy those contracts as well. So kind of, and by far there's more brownfield buildings than greenfield. So the more you can tag into that market and really strong service levels that mean you are well positioned to get those buildings, then we can really run hard at it. So that's something we're very focused on as well.
Ah, very good, very good. And just quickly on all your opportunities, can you give us a flavour for how you and your impact team work with company management? Are you on the boards? Are you in the businesses day by day? Like, how does that play out?
Yeah, so it's a good question. So first things, we are on the board, and so we either want to be a partner where we have a majority stake, or we want to have a majority stake in our own right. So on all the businesses we own, we'll have a number of board positions as part of that. In addition to that, we see a sort of key part of our role as creating sort of scaffolding business plan that management can work within and ensuring the incentives are right. And that means we like management and layers below management owning part of the company. That's really important. The second thing, though, is there are areas where we can help, and beyond just sitting on a board. So that could be, accessing senior management of companies that want to work with the community energy networks. It could be, in the case of, community housing providers that we want to work with them on something like GigaCom, we make those introductions. There's a range of ways we like to get involved, but it you don't want to be doing management's job for them. You just want to be sort of helping them sort of amplify their capabilities.
Very good, very good. Well, good to see it started. It's had a good start to its life, and no doubt our clients are in good hands, and we look forward to future outcomes. Just a reminder for everyone listening, this is general information only. Don't take this as financial advice, but please reach out if you've got any queries. Reach out to your MGD client advisor, and we'd be more than happy to address any personal advice queries that arise. So thank you, Steve. Good to catch up again. Keep up the good work, and we'll chat again down the track.
Thanks, Steve.
Thank you very much.